Hey everybody, welcome back to the channel. Today we're going to go deep into Alex Karp's shareholder letter that he put out yesterday. Didn't really get time to dissect it. I want to actually read through the entire thing, understand the stats, understand the analytics, and understand the core mission / vision that he has going forward on this company. I know earnings were not the best for everybody. I know a lot of people felt a little sad about it. The biggest thing that bumped me out was profitability in 2025. I thought that could have happened in 2024. So that's the main thing I took away that kind of sucked. But everything else in terms of growth, yes, it is deaccelerating, but not at the levels where I think is a thesis breaker for the company. Ultimately, at the end of the day, if you believe in their products, Gotham, Meta Constellation, their ability to stop bad things from happening, their ability to react to supply chains and logistics being flipped overnight, like there's just so much of a thesis that I have that it's hard for me to kind of go back on it because of a bad quarter. I also don't think that makes you a long-term investor. So at the end of the day, I see this as an opportunity to understand and reevaluate how the company is positioning themselves and understanding what the CEO says to the shareholders, I think is important as well. So let's get into that shareholder letter right now. By the way, the audio version of this content is also available. Link in the description if you don't want to watch the video, just want to listen to the audio. I have a new startup called Audia, and I have a ton of Palantir content on there for anyone who wants to listen to basically audio podcasts around Palantir. All right, a new company is emerging within the one we have built. Our business in the United States alone generated $1.4 billion in the revenue or $1.04 billion in the 12-month period ending with our second quarter this year, representing a 42% increase over the prior 12-month period. So when he says the new company is emerging within the one we built, if you listen to the shareholder call or the earnings call, essentially he's saying that people didn't think Palantir would cross the $1 billion mark, and they are now doing it, twice. So like that's his sort of argument for why that's a new company emerging within the one we built. The strength and momentum we are seeing within our customers in the United States is a reflection of the refinement and maturation of our software platforms, which we believe will continue leading to increased broad adoption across sectors. That's basically saying, hey, we're going to grow. There's a lot of different sectors, whether it's healthcare, blockchain, energy, whatever it may be, that will adopt Palantir software. We have found that commercial enterprises and government agencies in the United States have been the earliest adopters of new forms of technology. The willingness of American institutions to experiment with novel software platforms and to invest in the success and durability of their platforms remains unparalleled. Essentially, this was kind of, I know some people were upset, like he's kind of throwing shade at Europe and other countries because like the United States adapts the quickest. But to me, I thought he was just saying like, look, you guys care about US market revenue. The US market is very friendly to our software because they want to adapt and become on the cutting edge of technology, which is why our software matters. Our quarterly revenue numbers in the US market underscore the significant and unrelenting growth of our business in recent years. And as you can see, the quarterly numbers, what they're not showing is that growth is not accelerating at the level that it was accelerating, but it is still growing at the end of the day, which is what I think we care about. Now, Sachin, when I was on the live stream with him, he's a fellow Palantir shareholder. His argument is that you need to be growing faster and quicker. You need to take that $2 billion that you have on the side and just pummel it into sales and growth, which hopefully they will do, but I think they are being strategic with that money and they're keeping it in cash for a reason. And so, that's something we're gonna have to talk about, and we'll talk about more on the podcast this Friday. A broader shift, if not return to the United States, is also underway. The proportion of our revenue generated in the United States has increased substantially as compared to our total revenue worldwide. In Q1, for example, 55 million or 38% of our 146 million in the total revenue came from customers in the US. 3 years later, 2022, the proportion of our revenue generated in the US rose to 61%, with 290 million of our 473 in revenue from US commercial customers and defense and intelligence agencies. Now, what people are upset about is that defense and intelligence is still something that it seems like Palantir is relying on heavily in terms of building the revenue, building that 61%, and it should be more spanned across the international commercial sector. I get that, but I also understand that they've created a differentiated product, that 0-to-1 Gotham product, that should be scalable across the United States and should land them mega huge deals. So at the end of the day, I don't have necessarily a problem with that. I would like to see commercial scale more, and I would like to see them put the gas on the pedal, and ultimately I'm going to hope that's what's going to happen. Then we have US revenue as a total percentage of, here it is, as a total percentage of total revenue. We anticipate that the proportion of our revenue coming from the customers based in the US will continue to rise even as growth in Europe and other international markets accelerates, basically saying the US is still going to be a healthy market. Next, they say we believe that our most significant growth is yet to come. The development of the modern versions of our principal software platforms required an extended period of often intensive iteration with an early group of customers. Basically here he's saying, look, when you say we've been around for 18 years and not profitable, remember those first 15 years we were subsidized by the CIA trying to come up with a product that no one has created before, which is why we are so differentiated. It's why you guys want to invest invest this in us in the first place. And you have to sort of give us that leeway here because now that software is actually scalable, and now it's going to be scaled to a lot of different customers in the commercial and government sector. We have only recently begun to capture the value of these more refined and productized software platforms, basically saying after the 15 years of us developing it, now is an opportunity, which is why he's been quoted in meetings before saying there's no reason Palantir can't be 20 times bigger, because now is the opportunity to actually grow. And as a startup founder myself, I sympathize with this, because as a startup founder, I'm like, okay, we're at the prime stage. I've developed a product for 2 years, and now is the time for this to actually hit scale. It's a question of execution, but if I can execute, if my team can execute, we could hit millions of people using our product. I think it's the same thing for Karp. It's like, look, millions of people, millions of businesses, companies can use this product. It's a question of if we can capture that value. What we are concerned about as shareholders is like, you guys aren't capturing that value quick enough. And I think that's where the disconnect is going on. That's why people are mad about what happened with Palantir. Let's move on from this. Let's go to 3. The trend is even more pronounced when assessing a recent growth of adoption of our software by commercial customers in the US. Again, basically showing you here that in the US, commercial customers are buying the product, are buying the software. And that matters because US clients mean something. Like every Fortune 500 company should have Palantir, just like they all have CRM softwares with Salesforce, right? Just like they all have Microsoft Excel. Like they should all have Palantir if Palantir is trying to become this operating system for the modern enterprise. And so he's trying to prove that like the United States is going to be a healthy place for us to be able to do that. We'll move on from there. Let's go here. Okay. Our software products and platforms are at the center of so much in the world, including the distribution of vaccines to millions and an ongoing war in Eastern Europe. Apollo has developed into a standalone offering that will become essential to commercial and governmental markets. If you believe in the growth story of Palantir and you believe that their technology is fundamentally different, you've got to believe when the CEO says things like Apollo is going to be a standalone product that is going to generate in and of itself. I mean, I think I was talking to someone a while ago talking about the governmental sector that says the government business in and of itself via Apollo and Gotham should be a $100 billion market by itself. The execution is what's required here, but if you believe in the growth story of Palantir, that's what you believe. Just like, and again, I hate to make this reference, but like if you believe that Tesla was going to have the best autonomous driving, the best differentiated electric car, that's what you believed in the dirt years, in the hard years. Again, I'm not saying Palantir is Tesla. I'm just saying if you believe in a growth company at that scale, when it's not in its mature scale, which is where all the reward comes in if you invest in the earliest stages, then that's what you have to believe in. If you don't believe in that, then you don't invest, right? And this is why it's important to understand these products and not blindly invest in this stuff just because someone on YouTube is talking about it. We believe that the demand from the large enterprises for a software delivery and maintenance solution that is platform agnostic will be as significant as the demand for the underlying data integration and analytical capabilities themselves. This is an incredibly important line. So what Apollo does at a sort of broad level is allow the delivery and maintenance of software at scale. And I've talked to CodeStrap about this, and the way he describes it is like, all right, like you have all these developers working on all these different things, all these different products. Apollo is managing the fleet of the ability for you to send those updates out into the consumer into the world, and so the products can actually get the software updates they need. You need something to manage the delivery and maintenance of that stuff. That is platform agnostic. Any company in the world could use that, and it doesn't matter what software you're using. You can plug in Apollo on the back end and actually be able to integrate that. He's saying that the demand for underlying data integration and analytical capabilities, which is the big data center, this is what all the big companies are, Databricks, Snowflake, that's what they're after. He's saying Apollo will have that level of demand as well. And that's going to be important when it comes to addressing what Apollo can do. While our focus in the short term remains on making our principal software markets available to increasingly broad segments of the market, we are working aggressively to identify additional component parts and products embedded within those platforms that have potential as commercial offerings on their own. This is another thing from Karp saying, look, we are trying to productize Foundry. We are trying to find what are the 7 best things people care about for Foundry, which is why they included this pay per as you go offering, which they recently added last quarter, and they're trying to commoditize those. Now, our thing as shareholders is do it faster, right? We're like, you should be able to see what people care about for Foundry and just like make that into a product and launch it tomorrow. I think they will do that by the end of the year. It seems like that's what their focus is. If they don't, I would be a little upset about that. But I think because they've been talking about it for a while, so I think they want to do that. Our platform consists of more than 700 component parts and 65 separate applications. And each one of those component parts has the potential to become a dominant and standalone software product in its own right. That's awesome. And that's a super bull case for Palantir, but Palantir's got to get that done. Like they've got to be able to say, okay, all these different things can become different products in and of themselves. We are building an enterprise software incumbent whose depth and reach will continue to emerge over time, and we remain focused on the long term. So they're cash and cash equivalents. Now, again, this is something that people have an issue with. At the end of last quarter, we had $2.4 billion in the bank and no debt, the combination of which will continue to secure our ability to develop highly differentiated software platforms, notwithstanding the vicissitudes of the broader market and shifting macroeconomic conditions. What Karp is saying here is like, look, we've got money. We don't need to beg for money like most companies do. We don't need to raise capital. We don't need to do that stuff. We have the money. So when we're developing this stuff and we're putting R&D and we're really trying to come up with this stuff, we've got $2.4 billion in cash. What a lot of shareholders are saying is like, take a Billy and put it into some jeans for those salesmen, Billie Jean, if you guys get the reference, and let them start selling the freaking product and keep the other Billy for R&D. Now, Palantir obviously must feel some type of way about the market, the geopolitical sector, whatever is going on, to the point where they don't want to be that risk on with their cash. And that to me says maybe they know something we don't. This Russia-Ukraine, I'm like, maybe there's something in a world in which it's better for them to have cash. But it seems like if they were to utilize that money in a more effective way and ramp up sales, then maybe we would have, more growth. That's something that, I don't know, that's a management thing. Like I can't be the ones to be like, hey guys, go spend $1 billion on sale. Like maybe that's not what they should do. So that's something I think we're going to take a lot. I think we're going to need next quarter to really know. If they have another $2.4 billion in cash in the quarter and growth sucks, it's like maybe you should spend that money in a different way, right? It's like you don't just have money sitting in the bank for no reason. Like you need to spend and grow if you're a high growth tech company. So we're going to see how that happens over time. Free cash flow, $424 million. Again, they're not profitable. So like that's the part that kind of sucks. We are repeatedly decided to raise and preserve capital when others were spending. This is why they're now they're 25% hiring. Let's see if that reduces some of their $2.4 billion as well in cash, which is good. That 25% hiring by the end of the year might be those salespeople, but that's got to result in growth, and it's got to result, hopefully by 2023 a lot more quicker. Our strategy in this regard has secured our ability to continue refining and developing our software platforms in order to maximize long term. Now, last thing he says, we are working towards a future where all large institutions in the US, which is why they focus so much on US commercial revenue within this letter, and its allies abroad are running significant segments of their operations, if not their operations as a whole, on Palantir. Most other companies are targeting small segments of the market. We see and intend to capture the whole. That's really good words, and I like hearing that, but you also want to see the execution happen. If your outlook was 30% year over year until 2025, your CAGR, and then you reduce it to 23% basically by revising your guidance, you're not capturing the whole market. You may intend to capture the whole market, but you're not doing that. Now, does that mean I sell my position because of that? No, but that does mean I can be a little bit more critical here and say, all right, Palantir, if you said the entire US and large institutions will use your product, two things. Number one, get them to actually use the product, which means grow, which means don't grow at 23% year over year. Give me 30, give me 35, or at least surprise me. Number two, and this is a good point that Chris mentioned on my live stream, which is like maybe go after smaller customers. Like just maybe get smaller people and offer really smaller productized thin versions of your product and get 1,000 small businesses to use Palantir for like understanding their sales forecasting versus, the biggest institutions in the world. I understand why they want to work with those institutions. I understand why it's good for growth. I understand that's part of their DNA, but you would hope that they have a bit more differentiation within them to get to the other sectors of the economy and all the other small businesses that could potentially use their product. And I think that's ultimately what I'm looking for. So when I read that shareholder letter, and I'll probably do some more videos in the future where I'm talking about analyzing what Karp said in the actual call, because he said some interesting things in the call when he's banging on the table, stuff like that. I think his anger comes from the fact that he thinks they're growing. He thinks commercial revenue is up. He thinks they've been doing a phenomenal job. He thinks that it's a business that 2 years ago no one would have ever believed could have happened because they didn't believe their technology was good. They believed, oh, you took 15 years, you're not profitable. How can you ever grow? He believes they're still a startup and they're going to be able to grow. What shareholders are disconnecting with is the lack of crazy amount of growth that we were sold on in terms of the vision for Palantir. And also the fact that we don't think they're moving fast enough, and fast enough means A, spend more of your money, B, hire more salespeople, C, make smaller versions of your stuff because all the big guys are making smaller versions of their stuff and they're getting people to have a freemium version and then sign up in 10 days and actually scale. I think most shareholders right now are feeling Palantir doesn't understand sales. I don't think that's unfixable. I think that's very fixable. I think you fix that within a month, couple months. Not saying that it results in growth, but the culture of only engineers, only product sells itself, don't have to do sales, that can change overnight. I really do think that can change very quickly, and that can result in massive amounts of growth. The question is Palantir willing to change that? And are they willing to, keep shareholders in the blue until they change that? And I think the problem with the shareholders call yesterday was just like, it was too robotic. It was like they were cutting off on the questions. I think the shareholder call could have gone better. And I think if they just laid out, hey, like we have a mission to understand sales in a more differentiated way instead of like kind of just only focusing on how we're the best and everything like that, which I believe now you got to sell it, then I think it would have been a little bit better. So overall, not selling my position, not buying the dip just yet, waiting it out to see a little bit more. I would like to get in the 7 to 8 range if I could buy the dip there. I think at these levels, again, the macro headwinds for them to still put up these numbers is good. And I